Good morning, all. This is Pitambaran Achyutan Pisharadi from PDM Advisors Private Limited. Now, today we are going to understand how to select a stock for investment from Nifty 50 or any other stock list. So, I have created a Google Sheet with the heading Selection of Stock for Investment. Now, if I want to filter those stocks where I should add for investment, this Excel will be helpful. Now in column C, I will write the stock name. This will help me to take data from Google Sheet and analyze the market. Now for example, if I take ACC, then here in this B column, I have to write NSE colon, and in the A column, I would write equals concatenate, and then I will select B and column C to merge it as an NSE colon ACC. Now here I will be putting the current price. I want the current price of that particular scrape. Then I would be using the high of 52 days and the low of 52 days. Here if I don't put a space, I can use the same cell for values. Here then I will calculate the mean of these two values. Now if I have to find out the price of ACC current price, I would type Google Finance bracket. I should select this scrape and then write in inverted comma price, and then again I will close this and I will get the price of ACC. Now here the problem is that I selected C2, that is I selected ACC. That is why I am not getting a correct price. Instead of that, I should select A column. It will give me the current price. Because whenever we are searching for Google Finance, it is taking into consideration all the stocks that is available in trading. So we have to be specific that I want to search the stock price of a stock which is in NSE. That is why we have used NSE colon ACC. So here it's very important that you specify it not from the C list, but you have to select A list. Now similarly, if I want to find the 52-week high, I would do the same thing, is equal to Google Finance A, and then I will write 52. If I click this, it will automatically calculate the 52-week high for me. Similarly, here I will write Google Finance A and then comma and A comma, and then I will write low 52. If I select these things, I will get the 52-week high and 52-week low. Now I will be calculating average high plus low divided by 2. I'm getting the value of 2244.50. Now if you see here, the current price is 2371, which is greater than this. That means now if I intend to buy ACC, it is not the right time to buy ACC. Now what we do is generally we buy stocks in 10 steps. So if the market continues its fall, I will keep on buying the stock whenever the stock falls by so and so amount. Now how to calculate that amount? So it's a very simple method wherein you calculate the difference between the mean and the low. So here I am getting the value of 344.50. That means if I start buying now from the mean, if I start buying below the mean till the low 52, there is 344 points. But since I'm planning to buy 10 trades, what I would do is that I will divide this value by 7. Now here you can see that I'm getting some irrational numbers, but that is not applicable when I try to take a trade. So what I would do is that I will put this and then I will write here 0.05. Sorry. So I get a value of 49. Now this means that I will start below the mean and at every 49 rupees I will keep on accumulating the stock. Now when this is my buy set off. So when I calculate the buy set off, I also need to calculate my target. So what should be the target that I book? So here it will be buy target. Now my buy target should be always at least 4 or 5 times my set off. So if I take 4 times, this becomes approximately 196 points. So this is how I decide what should be my buy set off and my buy target. Now once this is done, I have got the price of ACC, and since now if I put a condition, if my LTP is less than the mean, then I should get start trading or start buying, whatever you can put into your condition that you want to start buying whenever the price goes to below this level. Now when I put a start buying, it is showing a false direction. Here that means I should not start my buying because my price is above my mean. So this will help us to focus on those stocks which are falling and avoid those stocks which are rising. So what I would do is here, I can use all the script list from Nifty 50 or the stocks that you want. You can add here, and here you can do Control C and Control V, so that whenever I put a stock name there, it will get populated. Automatically all the values will get populated. Now I'm showing you for a list of few stocks that you can focus on. Now I can go to NSE site and then I can go to NSE site, NSE India, and I can go to National Stock Exchange site, indexes Nifty 50. And when I click Nifty 50, I will get the stocks of Nifty 50. Here I can use the download CSV file. I can download it and save it on my system. This is the Nifty 50 stocks. So what I would do is that I will copy this symbol completely, copy, and then make a new sheet, values, and then I will use the filter button to alphabetically arrange these stocks. Now I don't read Nifty 50 here, so I will remove this Nifty 50 and I will add all the stocks from this list in the alphabetic order. Now this will help us to make a stock selection of the stocks in an alphabetic manner. Now if you see that all the changes are happening automatically. Now I just need to copy paste this formula and say that I want to do the trading in this particular fashion. So whenever I do this, I will get a list of stocks which are coming into my level of buying or level of selling. So if I am holding some stock, I will sell it when it goes above my 52-week high, near my 52-week high. And when I want to buy, I will buy those stocks which are coming down. Now I just copy paste this till the level is coming, so the prices will get updated. So you can see that the prices will get updated. E3, E2. Sorry, here I have made a mistake. See, what is happening is that when I'm selecting E1, I should select $E1. And here it should be $E2 because I am doing $F1 because I should select these things as value, common value. Here you just copy it. Sorry, $1, $F1. You can see that the values are populating. Now, if you see that Apollo Hospital is showing you a buy signal. Now, you can use filters to filter this thing into a separate sheet. But first, let us assume how to take the trading in these stocks. Now, you can see here, there are many stocks that are coming in the buy list: Apollo Hospital, BPCL, Divi's Lab, Dr. Reddy, HCL Tech, HDFC, HDFC Bank, HDFC Life, Hindalco, Infi, Kotak Bank, ONGC, Sri Cement, and by this is E1, E44. So you can see there are many scripts that one can buy in the Nifty 50 stocks. So this would be your buy set off and this would be your target. So it is this, in this way you can create a filter where you can select the stocks where you want to buy for investment. So when you buy these stocks and when the market starts moving up, you may be starting booking your profits. Then the scripts which are not in this list will come for buying. So you can continuously keep a progress of it and then churn your investment sheet in a systematic manner. Now there is one more how to decide the quantity that I want to buy. So what I would do is, for example, let me show here that suppose I plan to buy Apollo Hospital. Now if I'm planning to buy Apollo Hospital, then the logic that we have to use is I will be buying in 10 steps. So I will be saying there's 3, 4, 6, 7, 8, 9, 10. Now these are the 10 steps that I'm going to buy. So I will be accumulating this in this fashion. So 100 is the quantity. This is the buy quantity. This is the buy price. This is the value of the buy. And this will be your target price, buy target. Now the first buying price would be just below my mean. That means if it is 4648, I will say that I want to start buying at 46205. And now I will put this set off here just to understand what would be my next buy, and this would be my target. So this would be buy set off, and this will be my buy target. Now, if I consider the buy set off, this would be, again I can put a dollar sign and I can drag this. I can just copy paste or drag it, so I will come to know what would be my next level of buying. And if I consider the value of the stock, it would be approximately, you can see that I'm getting the value of the stock. I just drag it, and buy target would be whenever I buy plus my buy target, this would be my target price. So whenever you do this, you have to put F4 so that the value remains constant there. You don't have to worry about the. Now, if I consider what would be my per trade profit, would be my this 736 rupees into the quantity. So this would be 7360 for each trade. Now, depending upon this value, I can consider what I have to do. Now, if I take this as this is 3,77,725, and even if I get say 10-12 trades in a year, I am going to get 73,000 rupees profit. It is not that the market will come to this level, but there could be some way wherein the market trades in a narrow range and you keep on booking your profits. So what we have to see is what is the total value of your investment and what is the average per trade profit. Now suppose I feel this value is greater, then I can just use a simple formula wherein I put these values, that I'm taking these values from a common value, that is a first sell value, buying value I'm putting it. So what happens, I can keep on changing this value and I can see which amount is comfortable to me. Now suppose I feel that this value is extra for me. I can reduce this to 5 quantity, then all the quantity will become 5 and I can see if this value is comfortable to me. If I feel this value is still higher, I can select 3 quantity and I can decide what is the quantity that I have to purchase. So using this formula, you can calculate what is the total value of investment if the market falls to this level. And even again, if you see here, the low 52 was 3361 and we are buying at 32949. That means we are planning to buy below your 52-week low. So this will help us to understand how to make the trade plan. Now here I have selected the difference as divided by I have divided by 2, and here I have calculated the set off divided by 7. Now if you feel that this value is greater, you can divide it by 6 or 5 and then take your decision. But if your buy set off is greater, then the number of scripts that will get traded will be low. So you have to make a correlation that you get maximum number of scripts when it comes down, so that it's not just 1 or 2 trades. So it's always better to get such a comfortable value that whatever is your low 52, your buying price, last 10th buying price is less than your low of 52. So when you divide it by 7, it will always be less than your low of 52. So this is how you have to make your trade plan to calculate the value per script as well as the quantity and the profit per trade. This per trade profit should be more than 500 rupees in any circumstances. So if that is not sufficing into your system, then you don't take a trade. So that is why I told you that the target should be 4 times or 5 times. So if you keep a higher target, the number of trades will be low, but you will get more profit. So as per your comfort level, you have to decide what is your target, whether it is 3 times, 4 times or 5 times. You can select a price of your choice so that you are comfortable with your trade plan. But consider that this should be greater than 500. Minimum per trade you should get more than 500. The more you get, the more is beneficial, but you should not keep a target less than 500. So these things can be used in our investment sheet and you can trade without any hassles. You just have to fill in the Google sheet with these data: by set off, by target, by starting price, and the quantity that you wish to buy, and the system will continuously buy for you when the market tanks. So if you use the investment sheet for trading, we can help you how to integrate that Google Sheet with your trading terminal. Now we are giving these facilities in Zerodha, 5paisa, Finvacia, Fires, and your Angel One. So if anyone is interested to use this system and they have a trading broker, the broker is one of the 5, you can start your investment sheet in our automation of trading and get a good hassle-free trading system. So how to identify the stock and how to calculate the quantity has been explained in this video. I hope you have understood how to do this. It's not necessary that you have to do Nifty 50 stocks only. You can select any stock that you like, but I would always advise that you select a stock which is in the Nifty 50 so that it gives you good results. Now there is one more facility that you can use. You can calculate the difference between the high and low divided by low 52, and you find the percentage. If the percentage is less than 40, it's a good thing, and if the percentage is greater than 100, then we have to avoid that stock. It's not that, because we are finding the difference between the high and low, 52-week high and 52-week low. So if a stock is more volatile, there will be a greater difference between the 52-week high and the 52-week low, and you will understand that that stock should not be selected, or if you're selecting that stock, the stock quantity should be less and your investment should be only 25% max. So be very clear that whatever stocks that you select should not have a value greater than 100%. Now, why I'm saying that it should not have a value above 100%? The reason is very simple, that if a stock moves more than 100%, so if a stock is trading at 100 rupees, if the stock moves by 100% in 1 year, that means in the next year it will become 200. And if it has to continuous give that same return, the stock will have to move 400 in the 3rd year, 800 in the 4th year, 1600 in the 5th year, and 3200 in the 6th year. This type of return is next to impossible for a company to give consistently. So it is always advisable to go for a stock which is giving you 30% return that will be sustainable. Now suppose if I calculate a 30% return on 100 rupees, that would be approximately 130. So you will come to know that whatever 130 is, you can expect that much return in a year. So the low, if you keep this return as low as possible, then that growth is possible. A stock can go from 100 to 371 in a span of 5 years. That's not an issue, but it cannot go from 100 to 3200. So wherever you see a huge volatility in the script, you have to reduce your investment to such an extent that you get the benefits of the return, but you don't invest more capital and avoid the risk that you will have if the stock tanks. Now there are many instances where the script went to a new high and they have come below your price. So that is the reason why we say select a stock which is stable, and from the Nifty 50 you can get consistent return year after year, and you can make a substantial growth in your portfolio. I hope you have understood why this concept has been used to identify the stocks for trading. I hope you will make your own Excel in the Google Finance sheet and help yourself to identify the stocks which are good for buying and trade accordingly. Thank you for watching this video.